Your money or your ethics. Investors might feel they need to choose between the two when building their portfolios, but that's not necessarily the case. In this episode, we'll hear how one woman built an ethical portfolio that meets her financial goals and aims to change the world for the better, and how other women investors can aim to do the same. You're watching Inside Investing. Hello, everyone, and welcome to Inside Investing, the show that helps you level up your financial knowledge and sharpen your investing skills. I'm your host, Caitlin Cormier. Joining us is Janine Firpo, author of Activate Your Money, Invest to Grow Your Wealth and Build a Better World. She's also a co-founder at Invest for Better, a nonprofit that helps educate women on how to invest ethically. Janine, great to have you here with us. Thanks for taking the time.
Well, thank you so much for having me. It's delightful to be with you.
You've spent the better part of the last 20 years trying to align your money with your values. So what inspired you to start that journey and continue it for all these years?
Well, I had a career that started in 1981 in the high-tech industry in the Silicon Valley. And about 14 or 15 years into my career, I quit a job and I did a solo backpacking trip through sub-Saharan Africa and came back from that trip with a decision to do work that would help solve global poverty. And I ended up building a second career that was really aligned with my values. And that was looking at the role that tech and business could play in poverty alleviation. And at some point along the way, I realized that my money was actually working against me. It was invested in things that were actually helping to cause the problems that I was trying to solve. And integrity is really important to me. I realized my money is an extension of who I was, and it was out of integrity. And so I decided to figure out how could I take all of my capital, starting with my cash, and figure out how to invest it in a way that built the world I wanted to see. And I've been on that journey ever since.
You recently co-founded the nonprofit Invest for Better to help other women invest with their values in mind. Can you tell us about the work that your team does?
Sure. And I want to make clear that while we focus on women because women really get this kind of investing and really want to do this kind of investing, men can invest this way too. So it doesn't have to just be women. But what we do at Invest for Better is we started by putting women into small groups, sort of investment clubs, and teaching them how to have confidence in investors and also how to put their money to work in ways that matter to them. Since we started, we've now built a series of courses as well that are led by experts. So for example, next week we have a course that's starting on how you invest in a way that puts your money to work for a better environment. We've got courses on angel investing. We've got courses on how to choose stocks and stock funds that align with your values. We also have monthly webinars and seminars. We have open office hours with financial advisors. We do a lot to help build a community of women who are supporting each other in their financial journeys and in new ways and transforming their relationships with money.
Oh, I love that. That's so awesome. I can't wait to hear more. All right. Before we get into our conversation, just a quick note to our viewers. Subscribe to our YouTube channel, TD Direct Investing, so you don't miss an episode of Inside Investing. Make sure to let us know in the comments what you think about today's episode and what else you'd like us to cover on the show. With that said, let's get into it. First off, many investors have probably heard of ethical investing or ESG before, but you prefer the term values aligned investing. So what does it mean to be values aligned investor as you see it?
Well, for me, values aligned investing is really looking at your portfolio, your entire portfolio, with a values lens. What matters to you in the world? What would you like to see? And how would you like your money to be invested in ways that support those values? Things like ESG and other terms are really confusing to a lot of people. They mean different things to different people often, and they often only reference a particular asset class. Like ESG is related to the stock market only. It doesn't talk about cash or bonds or private investing or other forms of investments that you may have. And so I really wanted a term that was all encompassing and that really spoke to how we think about our own money, because investing is very personal and our values are very personal too.
I think that's great. I think it really kind of highlights exactly what it is, right? You're aligning with your values as opposed to just being ethical or whatever it might be. It's specific to you as an individual, what you're, what's important to
Exactly.
you. And yeah, I love that. Why do you feel it's important for women in particular to make a conscious effort to align their investments with their values?
We want and care about our families. We care about our communities. We want to uplift other women and girls. We want to make sure that we're handing a safe and sustainable planet to our children and our grandchildren. And we want our money to help those things. And so this is not a conversation that's very difficult when it comes to women. In fact, research shows that 84% of women want to invest this way. We just don't know how. Other thing that's really important for women to understand is that there has been research that shows that one of the biggest wealth transfers that's ever happened is underway right now, and that wealth is getting transferred to women. So if we start to think about how we invest our money and what we're investing it in, we literally, as a collective, have the ability to change the economy and have the things that we care about become much more prominent in society. They also say that women are risk averse, and it's not really true. We're risk aware. So, our strategy in investing is more about I'm going to actually come up with a plan and I'm going to invest for the long term based on that plan. And then I'm going to hold what I invest in and not be trading all the time, which is different than men. But here's the thing, that strategy that we have actually means we outperform men. So Fidelity did a really interesting study. It was 5 million accounts over a 10-year period, and they found that women consistently outperform men by 40 basis points a year. So we do better because we don't shoot from the hip as much. The confidence that men have may be ill placed. It may not be true confidence.
I'm not going to make any comment on it. We'll let our audience decide what they think about that.
Fair enough.
So if we've decided as an investor that this is important, how can we figure out which values are most important to us and what we might want to kind of prioritize within our investment decisions?
So, one of the tools that I use and that we teach in our courses is the Sustainable Development Goals. And the Sustainable Development Goals are a set of 17 objectives that were identified through a group process at the United Nations and codified by 193 members of the United Nations in 2015. And these are huge global goals that are being worked on by governments, by corporations, by individuals. They're things like eradicating hunger or clean water or gender equity or sustainable cities and lives. So there are all of these different goals that will make the world a better place if we can actually achieve them. They're tangible, they're real, they're part of a global movement that people are working on. And so when we use them, it becomes a very easy way for us to identify the things that most matter to us and to start applying them as a lens to our investment. And we tend to recommend that women choose between 1 to 5 of these goals for their own investment choices. And I do that personally, and I do it with my investing and my philanthropy as well.
So, as an example, let's say an investor decided they really care about fighting climate change. How could they look at potential investments through their ethical lens and find investments that might help advance that goal?
You start with, well, what can I do with my cash alternatives? So for example, you could look at certificates of deposit with financial institutions that are doing things related to climate change, making loans relate to people who want to bring in get EVs, electric vehicles, or who want solar panels, that kind of thing. You can think about your bond portfolio and think about investing in municipalities, water systems, or other kinds of things that would have positive environmental outcomes. You could look at your stock portfolio and say, I don't want to be in oil and gas. I want to exclude that from my portfolio. I want to exclude other kinds of things. Or I want to pick stock investments that are doing positive things for the environment, positive things for water, positive things for climate change. There's a lot of options in the stock market. And then if you look at private investing, there's all kinds of things that you can do in private investing through funds or direct investing in companies. You can think about real estate, timber. I mean, there's so many options. It really depends on what asset class you want to think about and the options within that asset class. So lots and lots of variety and lots of opportunity.
One of the challenges with ethical investing is that it's sometimes tough to find information on how various investments stack up to the values that we care about. Hear about this, we care about it, we want to participate, but how do we actually know what we're investing in is aligning? So, how do you find the data that you need to make those more informed decisions?
Well, I'm going to speak to the stock market initially because that's an area that a lot of us are invested in, right? A very, very easy way to start, believe it or not, is Google. Is just go out on your favorite web browser and Google something like best ESG stocks 2024 or best ESG funds, and you'll get people's perspective on this. It's a great way to start. There are also some really extraordinarily good tools that you can use. One of my favorites is something called As You Sow, Invest Your Values. And it's a free online tool. You just put any stock fund ticker into this tool, and it will grade that stock on oil and gas, tobacco, prison complex, gender equity. It's got 7 different lenses that it looks at. And it really drills into how much of a particular fund is invested that way in terms of dollars and percent, what companies it's in. It's just an extraordinarily great tool. But there are others as well, like Ethos ESG, Just Capital, which really uses a lens of workers' rights to determine what companies to invest in. So there are a number of free tools online that you can use. You can use Morningstar, they do a rating. You can use Yahoo Finance, they do a rating. So there's lots of free opportunities and information.
After our last conversation, you had talked about the As We Sow, and I took a look at it. It's really surprising how much that you can find out. And even like, you might not think that a particular, fund has anything to do with different areas, and you end up getting very shocked to see that they may have something to do with weapons, or something you wouldn't necessarily even consider them being a part of.
Yeah, so it's a fantastic tool. And one of the things that I've done is I've actually created some videos. So I have a YouTube channel called Activate Your Money. And there are some videos on it that teach you how to use As You Sow. And there are also some videos on it that teach you how to use Morningstar to really dig into what you actually own, because a lot of us don't really know. Another place is my book. One of the things that I did in Activate Your Money, um, I wanted to make it easy for people to find some of this stuff. So I'm very specific in the book about investments that you could make. And I give lists of different types of tools. I give lists of different types of investments. I give lists of different kinds of resources. So it's also a great resource for getting started, regardless of what asset class you want to think about.
So, can you take us through your process of researching potential investments through your value aligned criteria and deciding whether it meets your ethical standards?
So I think the first thing when I started this process and I took my portfolio back and I was like, I'm going to start figuring this out for myself, from my financial advisors, the first thing I did was looked at my asset allocations. How was my money allocated across the different asset classes? And what changes there did I want to make? And then I picked one asset class to start, because this can be overwhelming. And if you try to change your entire portfolio all at once, forget it. You'll just stop, because it's like way too much. So start with one thing, one place. Start thinking about, okay, what could be other options in this asset class, and make choices in that asset class. Move your money, then move on to the next asset class. That is the way that I address this, and I'm still at it. It's a long process. You do not have to do it all tomorrow. I mean, particularly as women, we think everything has to be done now, and we don't have to do this. This is more like a marathon than a sprint. And so just realize that learning how to be a confident investor and learning about the things that make you feel good about what your money is in is going to be a lifelong thing. You don't have to do it every day. I look at my money on a quarterly basis only. And some people only look at it once a year, but just take it at your own pace and don't feel like you have to rush through it.
Okay, so now I'm curious. What does your value aligned portfolio look like today compared to when you started your journey to improve it?
So it's a lot more of my money is actually in things that I really love. My stocks are almost all completely aligned with my values now, not 100%, because I've been investing for 30 plus years, and some of my investments have pretty significant embedded gains. Like one of my holdings is 95% gains. It doesn't make sense for me to just sell that and take all the tax implications of it. So I'm moving money little by little. One of the things that I did was in early COVID, as you might remember, the stock market absolutely plunged. And so I used that as an opportunity to sell off stuff I didn't like and buy things I did like because my gains were really low or I actually had losses that I could harvest. So think about that too as a strategy for shifting your money. The other thing to think about is if you have money in retirement accounts, then you can shift money there without capital gains.
You point out in your book that an investor first needs to understand their investor profile, so their goals, risk tolerance, and time horizon, before they start building their values aligned portfolios. Why do you feel that's so important?
I had about 40 women who were professional advisors, professional angels help me write the book. And one of those women reminded me that how we allocate our assets, like how much you have in cash, how much you have in bonds, how much you have in the stock market, in private investments, etc., is more important to our long-term health, financial health, than the actual investments we make. So, as part of being a smart, confident investor, it's really important to understand how you want your money to be allocated, what your time horizon is. So, if you have 20 or 30 years before you need certain capital, you can take a lot more risk with that capital, which means you have the potential to make more return. You need to understand that. You need to understand your risk profile. So, there are things that you need to know. Forget the values alignment piece of this. Just as an investor, understanding yourself, your goals, your objectives with your money is a preliminary foundational step to being a good investor.
Another key point that you make in the book, and I love this because I feel like sometimes I myself fall into this, and maybe women in general. I don't want to make a generalization, but could be that investors shouldn't let perfect be the enemy of good when they're researching values aligned investments. That definitely speaks to me. So, what do you mean by that?
It's going to be really hard to find a company that hits all the boxes. So you may, for example, find a company you love because they're doing great things for the environment, but they're terrible with their workers. So do you invest in them or not invest in them, right? That's a hard call. And this is where those SDGs that we talked about earlier can come in to help you. So if you've picked a subset of your values and say, these are my priorities and this is what I prioritize most, then that can help you make these choices. Maybe you really care about workers' rights. And so even though this company is doing great for the environment, you decide, I hate the way they show up around workers and women, and so I'm not going to invest in them. We may get to a point someday where you can get everything. I doubt it. I think we just have to make choices. And um, that's just the state of the world, is to choose among different things that we want to prioritize.
Yeah, it's interesting. I think it's a really good concept because you could kind of get paralyzed in that process or really narrow down your investing choices if perfection is your is what you're looking for.
And that's where your financial return could be more at risk too, right? So for me, this is not about, I think it's really important to say too, for me, this is not about giving up financial return to achieve these goals. This is yes, and I want financial return and I want a better world. And my own experience has shown that I can get both.
Some skeptics might say ethical investing and variations of it tend to produce poorer returns. You just mentioned that than traditional investing approaches. So, what would you say to that? So, you kind of mentioned that you don't want to take a huge risk on returns. So, tell us a little bit about that.
So there's 20 years of history and research that shows you do not have to give up financial returns for this. The challenge is there are articles that you can read today that tell you that you will not give up financial return. For example, a couple months back, there was an article by Forbes that was like, 100% you do not give up financial return. Less than a week later, there was an article by Marketplace saying that you do, right? So it's like, what do you believe? And the article by Marketplace was saying that only 3 out of 10 ESG funds outperformed the S&P 500. Okay, except if you look at most ESG funds, they're not benchmarked to the S&P 500. They're benchmarked to the Russell 1000. So it doesn't matter if they beat the S&P 500 or not. The only ESG funds that need to beat the S&P 500 are the ones that are benchmarked to the S&P 500. In my own life and what you can do as an investor, I have an investment that I made 30 years ago, 20 years ago, in a fund. I won't name it, but it's in a Vanguard fund that is often touted as the thing that people should get in because it's broad market. It has a very low fee, and a lot of folks talk about this particular fund. I have it. I also bought another fund that's very, very similar, also a Vanguard fund, also broad market, also super low fee, way better in terms of what it's doing in the world. So if you look at fund number one in As You Sow, it gets D's and F's across the board. If you look at the other fund I'm talking about, it gets B's, A's, and C's. Not perfect, right? Not perfect, but way better. So I bought it. Guess what? The second fund is outperforming the first fund, not only in terms of all the things I care about, but also financially. So I really recommend taking a look at what you own, taking a look at it on something like As You Sow, and then looking up some other funds and comparing them in terms of how they do financially and across all of these other metrics as well. You 100% do not have to give up financial return.
Ethical investing is important for us as individuals, but it's also important for the sustainability of companies, right? If they don't kind of fall in line with certain things, they're not going to be meeting regulations, or they're not necessarily going to be here into the future if they're not moving forward with these types of concepts anyways.
Exact 100%. In fact, I live in the state of California. I have State Farm Insurance. There was just an article yesterday saying they are pulling 75,000 accounts. They're sending out this summer notices to 75,000 of their insured saying we will no longer insure you in the state. And they are doing that because of the fires and the outcome of climate change here, right? If you're an investor in insurance companies and you're not thinking about these implications on these companies' bottom line, then you are leaving out a really, really important consideration and risk for the future wealth and prosperity of that company. You have to start thinking about this stuff in your investments if you want to have a long-term plan.
What about the notion that ethical investment funds tend to cost more than their traditional counterparts? How accurate would you say that is in your experience?
Well, I think that's true in some cases, and in some cases, particularly actively managed accounts. So there are actively managed accounts where you have fund managers that are making their choices. Those tend to always have higher fee structures than passively managed. Particularly, it's true across the board, whether they're impact or not. And some funds will have slightly higher fees because they're having to pay for ESG data. But I think that the bottom line is not the fees that you're paying, it's the return that you're getting on a particular investment, right? So if I am focused only on the fees, then I might be buying into a fund that has very low fees, but is returning me, say, 15% in a given year. Whereas I could look at another investment that maybe has 1.5% fee, which seems very high, but is returning 20% in a year, which is a better investment.
Yes, you can't just focus on one thing, right?
Right. Sometimes we get too strung around, a particular issue and we don't think about the whole picture. And I think ultimately the whole picture is what really matters.
Lastly, I just want to touch on the idea of shareholder advocacy, which you say is a powerful way for investors to influence the change in the world they want to see. So, how does this work?
So, shareholder advocacy is when you use shares in a company to put a resolution before the board at the annual board meeting and to actually ask the board to change their behavior. There are organizations and funds that do this on our behalf, which is the easiest way to do it. You can, as an individual, put forward a shareholder advocacy on your own, but it's a lot of work. So there are a variety of ways that you can get involved in this outside of having to do all the work yourself. But when there are enough people, and it doesn't even have to be a majority of shareholders, it can be a relatively small percentage. When a significant percentage of shareholders say, we want to see this change, it actually causes the executives to consider those requests and make changes in their business. So it can be a very powerful tool to create change. And as shareholders, we have the right to ask companies to do what we think is the right thing to do across a whole range of different issues.
I think it's so important because if nobody brings it forward, then there isn't going to be change, right? If it's not the easy thing for the company to do, then and oftentimes that they may choose not to, right? So yeah, absolutely, it's so
Exactly.
important. All right, Janine, we're going to have to leave it there. Thanks for filling us in on your journey to building a values aligned portfolio and how other investors can aim for the same. And on that note, I wanted to take a moment to hop into WebBroker to help our viewers get started with their research. If you're looking for a tool within WebBroker to help with your values aligned investing, look no further than under Research, Tools, and Screeners. We have our stock screener where we can look at companies within a particular theme. In this case, we are looking for those value aligned investments, so we can consider the ESG theme. ESG stands for Environmental, Social, and Governance. And this type of investing is used to kind of screen through investments based on their corporate policies and to basically encourage companies to act responsibly moving forward. As you can see here, there's a couple indices that make up what this particular screen is. So once we click, we will see that there are 217 matches within this particular theme. Obviously, that's a lot for us to kind of navigate through. So we may choose, for example, to narrow down a bit further. I can click, for example, on exchange and choose maybe only Canadian companies. I could also potentially choose dividend yield. Perhaps I'm looking for a company that is going to pay a dividend. So we'll say maybe between 2 and 10% for a maximum dividend yield. You'll notice I'm down to 31 matches, so I've significantly reduced the number of stocks that I have to look at. And then from in here, I can have a list of companies to do further research on to see if they actually do fit within my personal values aligned investment portfolio. I can click on the individual companies. I can see their websites. I can add these companies onto a watch list so I can keep an eye on them and basically use this as a jumping off point to do some further research on these companies. Okay, Janine, any final thoughts you'd like to share with our viewers?
Just do it. Just get started. Really think about what your money is doing. Think about how we've traditionally been taught that there's money for philanthropy and doing good, and there's money that we invest to maximize return. We do not have to buy into that very arcane way of thinking about our money anymore. We can actually use all of our money to do good and to build our wealth at the same time. And it's not that much harder than what you're doing right now around your investing.
I love it. That's great. Thanks again for joining us. And for those in our audience, make sure to register for upcoming live webinars and check out our library of on-demand content available in the Learning Center and on our YouTube page. See you all next time.
Have more questions? Check out the links to the right and in the description below.